Hello friends. So today we are going to discuss this company Pyramid Technoplast Ltd. As you can see on the screen, all the data of the company, basic data of the company on the screen is available. So it's a 562 crore market cap company. The company was started in 1997 by the Agarwal family. Pyramid is a prominent industrial packaging company known for their polymer-based model products. It has three products basically. They produce drums. It's a drum manufacturing company. So they produce polymer drums, intermediate bulk containers, and steel drums. The company currently has 7 manufacturing facilities, and the capacity is 22,818 MTPA for polymer drums, 420,000 units per year of IBC, and 10,800 MTPA of MS drums. Out of total 7 plants, 5 plants in our Behruch, in Gujarat, and 2 are in Silvassa. So we'll take a look at the financials of the company. Company recently listed on the stock exchange. Its IPO came last year in August 2023. The IPO price was around 166 rupees, and it's listed on both NSE and BSE. The promoters of the company are Mr. Vijay Kumar Agarwal, he is the MD and the chairman of the company. Mr. Jaiprakash Agarwal, he is the whole-time director and the CFO of the company. And promoters currently hold 74.94% of the holding post IPO. So this is the pictures of the 7 plants the company has, 2 in Silvassa and 5 in Behruch. Various capacities plant-wise is given here. Like in Silvassa, for Unit 1, they have 5180 MTPA. And in Unit 2, they have 3282 MTPA capacity. Unit 7 was recently completed and commercial production started in September 2023 last year. These are the financials of the company. From 250 crore sale in 2020, company is currently clocking around 500 crore sales. Profit has increased from 6 crores to 32 crore in FY23. Company's margin range about 7 to 9% in the past 4 years. Post IPO, they have become debt free, as you can see. Company also has 20 crore plus of net cash on its books as of September 2023. So these are some products of the company: IBC containers. Then they have plastic barrels, and then they have MS drums. So currently in FY23, plastic barrels comprise of 52% of the sales. IBC, sale from IBC is 32%, polymer drums 52%, and MS drums is around 8%. So here is the product-wise data for the past 3 years. As we can see here, polymer drums was 57% in FY21, which has come down to 51% in FY23. And IBC have increased from 26% to 32%. MS drum is constant around 8%, and others is around 7-8%. Others is nothing but sale of raw materials, scrap, and accessories the company has. So IBC has shown good growth from 82 crore in FY21 to 153 crores in FY23. So what makes this company interesting? There are a couple of reasons, like why this company is on our radar. Company is on major capex spree, and in next 2 to 4 years, they are going to do some major capex. They have recently launched Unit 7, in which they will do phase-wise expansion, and they also acquired land in Maharashtra, where they will be setting a completely new plant, and they are moving outside of Gujarat with this plant. So currently revenue of the company is 500 crore rupees, and the current 7 units that they have, this both these units in Gujarat have revenue potential of around 7 to 750 crores. In Maharashtra, they have big capex plan for the next 4 to 5 years. The capex will be done in 3 phases. Total revenue potential from Maharashtra unit alone will be around 400 crore rupees, but it will take 4 to 5 years for full development to happen and full scale commercialization to happen. In the phase one, they will be investing around 40 to 45 crore rupees, and it will be completed in 2 years. And from this 40 to 45 crore rupees, they will have revenue potential of 150 crore rupees. So as here you can see, capex budget for the next 2 years is 40 to 50 crores. This includes Maharashtra expansion, Unit 6 and Unit 7 expansion. And asset turnover from this capex is expected to be 5x. Since they already have the land in their books, so the capex is only for machinery and other things and not for land. And hence the asset turnover is high from this capex. And company will not be taking any loan, and they will do it from internal accruals only. They've recently expanded their metal drum capacity from 30,000 to 50,000 units using automation. And they have already acquired a land adjacent to Unit 6, and they will raise the capacity of metal drums ultimately to 90,000 units per month. So Unit 7, they've already reached 40% capacity, and as soon as they will reach 50%, they will plan for another second line at the same place. Another thing is the rising share of IBC. As we showed earlier that in FY21, it was 26% and now it has become 32%. So why it's important is because the margins are very good in IBC. Polymer drums have an EBITDA margin of 8.22%, whereas IBC has EBITDA margin of 12.3%. And metal drums currently have 2% margin only in the past 9 months. The reason being, as told by the management in the con calls and latest con calls, that they are very aggressive in pricing metal drums because they want to gain market share. And that's why they're currently having very low margin in that business. Going forward, as the share of IBC increases, the margins will also increase from current 9 to 10% to mid double-digit margins. Promoters have very good stake in the company of 75%, the maximum allowable as per the exchange guidelines. So IBC, the product itself, is also growing very well in India. So it's expected that the total demand for IBC is expected to grow at CAGR of 10.56% from 40,000 crore in FY22 to 89,000 crore in FY30. Rapid IBC demand growth is expected in India's end-use industries like chemicals, pharmaceuticals, and foods and beverages, fueled by efficiency, safety, and space optimization of India ranks fourth globally in agrochemical and specialty chemical production. This industry's growth, along with export-import activities, is further driving IBC demand for chemical transportation. So here we can see there's a chart of how industry-wise utilization demand for IBC. Here we can also see how the company has done very good capex in the past 2 years and the further capex they are about to do. See, fixed assets of 50 crore rupees in FY22, it became 65 crore in FY23 and 91 crore in September 2023 itself. In next 2 3 years also, next 2 years it will increase by another 45 to 50 crores with the new capex in Unit 7 and the Maharashtra unit. Company had good cash flows in FY23. ROE of the company has been pretty good till FY23. Now, after the increased equity base, ROE has recently come down. But as they get additional sales from the new expansion and the margins increase, it should come to their historical levels of 30%. Company has seen good improvement in debtor days from 69 days, 75 days in FY21 to 59 days in March 23. These are the quarterly numbers of the company. Sale have been stagnant around 125, 130 crore for past 5-6 quarters. And as the ramp up of Unit 7 happens and the new capacity comes in, this is likely to increase. Management has guided for 15 to 20% growth for the next year. So now let's look at some of the risks which might play out in this story. So raw material price volatility risk is there. The major raw materials are steel and HDPE granules, which are susceptible to price volatility. The HDPE granules are susceptible to crude oil and polymer price volatility. When the price of raw materials is low, and whatever the rate is, they have to reduce it and sell it to the other person. The company has a terms with its customers that when the rate of raw material increases, they increase the rate, and when it decreases, they decreases the rate. In the market, if the rate is low, then the sale will be done at lower price. This was the major reason for lower margins and lower sales growth, despite double-digit volume growth, as the polymer prices continued its downward trend throughout the year. Volumes have grown for 9 months FY24. The IBC volume has increased by 24%, metal drums by 31%, and polymer drums by 11%. With a continuous fall in raw material prices, HDPE prices are down from around 112 per kg to 99 per kg in the last 6 to 8 months. The industry is highly competitive. The company is operating in a highly competitive and fragmented industry, as evident by its low operating margins of 9 to 11%. It is exposed to intense competition from several organized and unorganized players operating in the industry. The industry maintains low entry barriers, which may increase competition and resultant affect the market share of the company. Company's operations are a little bit working capital intensive. The working capital management of the PTL remained intensive. GCA days at 111 days as on 31st March 23, as against 121 days in FY22. The debtor days stood at 59 days against 69 days in FY22. Subsequently, the payables stood at 49 days in FY23 against 37 days in FY22. The average bank utilization in the last 10 months ended February 24 remained at 16% of the fund based. So here's the price chart of the company. It went up till 240, now it's down to 160. So 2-3 tailwinds or key triggers which might propel the working of the company are the latest expansion they are doing, 40-50 crore expansion. Then rising share of IBC in the total sales, which will lead to margin expansion, and the recovery of HDPE prices, which will give further push to sale price and margins. Coming to the valuations of the company has an enterprise value of 560 crores and is available at EV by EBITDA of 12.44 times, market cap to sales of 1.1 times based on trailing numbers, and price to earning ratio of 19.4 times. Company has grown PAT at 37% CAGR and sales at 24% CAGR in the past 2 years from FY21 to FY23. Management has guided for 15 to 20% sales growth in FY25. Considering the reasonable price to earning ratio and current valuations and the growth management has guided on the industry growth expectations and consistent ROE of 30% plus, it's available at very decent valuations and can be looked for the next 1 to 2 years. Thank you very much.